Introduction: the mindset behind a billionaire investor. What separates Warren Buffett from the rest of the world isn't just his bank account, it's how he thinks. He's not flashy, he doesn't chase trends, he's not obsessed with being right all the time. Instead, he plays a long game, grounded in clarity, discipline, and patience. And that mindset, more than any specific investment strategy, is what has made him one of the wealthiest and most respected people on the planet. Buffett himself has said, "I always knew I was going to be rich." I don't think I ever doubted it for a minute. That kind of certainty doesn't come from arrogance. It comes from conviction, a quiet, internal belief based on habits, not hype. It's the belief that if you make a series of smart, simple decisions over a long period of time, the results will eventually become undeniable. This audiobook isn't a technical breakdown of investing. It's not about which stocks to buy or how to read balance sheets. It's about what the top 1% actually do differently, mentally, emotionally, and behaviorally. It's about how Warren Buffett approaches life, decisions, money, and time, and how you can take those principles and apply them no matter where you're starting from. Because the truth is, most people are looking for shortcuts. They want hacks, quick wins, fast money. The top 1% don't operate that way. They understand the power of time. They value focus over variety. They avoid emotional decision-making. And most importantly, they're consistent. They don't just do the right thing once. They repeat it for decades. The goal of this audiobook is to give you a mental blueprint, a way of thinking that mirrors what Buffett has proven over and over again. Each lesson in the coming chapters will focus on one of the habits or mental models that define how Buffett and the wealthiest people think differently. This isn't about copying Buffett's life, it's about adopting his philosophy. You don't need to be born rich to think like the rich, and when you start thinking like the 1%, you'll begin to see decisions, money, and your future in a completely different way. Let's begin. Warren Buffett's favorite holding period: forever. And his biggest piece of advice to young people: start early. These two ideas, starting early and thinking long-term, are cornerstones of Buffett's philosophy. While most people obsess over quick wins, Buffett plays the compounding game. He knows that the real power of wealth isn't in fast profits, it's in exponential growth over time. That's why he famously bought his first stock at the age of 11 and has been investing ever since. But this lesson isn't just about starting young in age, it's about starting early in intent. Whether you're 17 or 57, the earlier you begin thinking long-term, the sooner compounding starts working in your favor. Buffett's success is not a story of sudden wealth. It's a story of decades, of consistent action, patience, and a mindset that most people find boring. So what does thinking long-term really look like? It means valuing delayed gratification over short-term dopamine. Most people want results now, a promotion this quarter, a huge return this month, recognition today. But the 1% think differently. They plant seeds that may not bear fruit for years, but when they do, the rewards are massive. Buffett often says that wealth builds like a snowball. You need a long hill and a lot of patience. Once it starts rolling, it grows faster than you ever imagined. It also means choosing investments, financial or personal, that you're willing to stick with. Buffett doesn't jump in and out of stocks. He looks for businesses he understands, believes in, and is comfortable holding for decades. He once said, "If you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes. That kind of discipline protects him from the emotional chaos that destroys most investors. This same idea applies to your habits. Think about your health, relationships, career, or business. What would change if you only made decisions that would benefit you 5, 10, or 20 years from now? What if every action was a small investment in a much bigger result? Most people are too distracted by immediate discomfort or temptation to make those choices. The 1% aren't. Another critical point Buffett teaches is the value of not interrupting compounding. He avoids unnecessary risk, bad debt, or drama because all of those things slow down the snowball. He doesn't try to double his money in a month. He tries to avoid losing it, protect the downside, and let time do the heavy lifting. This mindset also helps you stay calm when others panic. Buffett is famous for buying when others are scared. During market crashes, when people sell in fear, Buffett stays steady or even adds to his positions. That's because his horizon isn't the next quarter, it's the next decade. He's not reacting to noise, he's anchored to a vision. And the longer you think, the fewer decisions you need to make. Buffett has said that his best investments required very few big moves, but they were made with clarity and commitment. That's a lesson in itself. The 1% don't do more. They do less, better, longer. So what can you do with this? Start now. Wherever you are, begin making decisions from a place of long-term vision. If you're investing, commit to holding for years. If you're building something, resist the urge to quit when it doesn't grow in the first 6 months. If you're learning a skill, stop looking for shortcuts and put in the hours. Every time you think long instead of fast, you separate yourself from the 99%. And remember this, the power of starting early isn't just about time, it's about belief. When you begin thinking long-term, you signal to yourself that your future matters. You stop living just to survive the day and start building something real. Warren Buffett didn't become wealthy because of luck or complexity. He became wealthy because he started early, stayed consistent, and played a long game that almost no one else had the discipline to play. And that's exactly what you can do too. Lesson 2. Master one thing and stick to it. In a world obsessed with doing more, Warren Buffett built his fortune by doing less, but doing it with absolute focus. He didn't chase every opportunity. He didn't invest in every trend. He found one thing, value investing, and mastered it for over 70 years. That kind of focus is rare, but it's exactly what sets the 1% apart from everyone else. Buffett often talks about the concept of a circle of competence. This is the area where you have real knowledge, experience, and confidence. It doesn't have to be broad, it just has to be deep. Most people try to learn everything. The 1% go deep on what matters most to them and ignore the rest. Buffett admits he doesn't understand tech trends or cryptocurrencies, and he doesn't care. He stays in his lane and wins there. This goes completely against what most people do. In school and in business, we're told to be well-rounded, to say yes to more, to have multiple backup plans. But the most successful people do the opposite. They specialize, they get great at something, and stick with it longer than everyone else. Buffett didn't get rich by being a generalist. He got rich by obsessing over one game and playing it better than anyone else. There's a hidden power in repetition. The more time you spend mastering one skill, the more your results compound, not just in ability, but in confidence. Most people get bored and switch too quickly. They start something, face a challenge, and move on. The 1% push through the boredom. They know that mastery lives on the other side of monotony. This isn't about rigidity, it's about clarity. Buffett didn't become wealthy by jumping between ideas. He became wealthy because he knew exactly what he was looking for. When evaluating a company, he applies the same filters every time. Is the business simple? Does it have a durable competitive advantage? Is it run by honest, competent people? Is it available at a fair price? He doesn't reinvent the wheel. He uses a clear checklist and follows it with discipline. The same applies to life outside of investing. Whether you're in business, health, relationships, or personal growth, success often comes from refining one approach over time. Most people want novelty. The 1% want results. and they're willing to delay variety in order to deepen mastery. Buffett also believes in saying no. He says, the difference between successful people and really successful people is that really successful people say no to almost everything. Every time you say yes to something new, you're saying no to the thing you're trying to master. The 1% protect their time, energy, and attention like their future depends on it, because it does. There's also emotional stability in sticking to one thing. When you're constantly pivoting, you're always in beginner mode, you're always uncertain. But when you commit to mastering something, your confidence builds with every cycle. You're not reacting, you're refining. That's where real power comes from. So how do you apply this? Start by defining your own circle of competence. What do you truly understand? What skill or area of life could you master over the next 5 years? Don't pick something just because it's trendy. Pick something that aligns with who you are and something you're willing to stick with when it gets boring. That's where the leverage is. Then simplify. Eliminate the noise. Say no to distractions even if they seem like good opportunities. Good is the enemy of great. Focus is rare. And in a distracted world, the ability to focus is a competitive advantage. Next, create your own checklist. Just like Buffett has his rules for investing, you can create rules for how you make decisions. What are your non-negotiables? What questions do you ask before committing? Having a personal system not only increases your odds of success, it reduces decision fatigue and emotional stress. And finally, commit to long-term refinement. Don't just do something once and expect results. Do it again and again. Track your progress. Review your results. Keep getting 1% better. Over time, this creates massive momentum. You don't need to be good at everything. You need to be great at your thing. Buffett didn't diversify himself into greatness. He focused, committed, and refined a single strategy until the world couldn't ignore his results. You can do the same. Lesson 3. Delay gratification and avoid lifestyle creep. Warren Buffett is one of the richest people in the world, and yet he still lives in the same modest house he bought in 1958. He drives affordable cars, eats simple meals, and doesn't care for luxury. Why? Because he understands a powerful truth the 1% live by. Wealth is built by discipline, not display. In today's world, it's easy to confuse looking rich with being rich. Social media glorifies expensive cars, designer clothes, and high-end travel. The average person sees wealth as something to show off, but the 1% see it differently. They see money as a tool to multiply freedom, not as a way to impress others. Buffett once said, if you buy things you don't need, soon you'll have to sell things you do need. That mindset of restraint, clarity, and long-term thinking is why he's remained financially strong, while others ride the roller coaster of debt and lifestyle inflation. Lifestyle creep is when your spending rises with your income. You get a raise, and suddenly you move to a bigger apartment, buy a nicer car, upgrade your clothes. It feels like progress, but it's a trap. Why? Because your expenses rise in step with your income, leaving you with the same stress and financial vulnerability as before. You're earning more but saving nothing. You're working harder just to maintain appearances. The 1% avoid this trap. They delay gratification not because they're cheap, but because they value options over objects. Every dollar they don't spend is a dollar that can be invested, grown, and turned into income. They know that real wealth is not what you buy, it's what you keep. Buffett didn't need to buy a mansion to feel successful. His confidence doesn't come from external signals. It comes from knowing he's playing a smarter game. He's not living for approval. He's living for freedom. And that's a mindset anyone can adopt. So how do you build this discipline? Start with awareness. Look at your spending and ask, is this moving me toward financial freedom, or is it a distraction? That doesn't mean you have to cut out all enjoyment. It means you spend intentionally, not emotionally. The 1% enjoy life, but they do so in a way that supports their future, not undermines it. Second, set rules for upgrades. For example, don't buy a new car just because your income went up. Buy it when your investments cover the cost. Or decide you'll only increase your lifestyle by 10% for every 100% increase in income. That way, your wealth grows faster than your spending. Third, automate your savings and investing. Pay yourself first. Move money into investments before you even see it in your checking account. This removes willpower from the equation and helps you build wealth by default. Fourth, question the stories you've inherited about money and success. Were you taught that expensive things equal status? That more is always better? These beliefs may be invisible, but they drive your behavior. The 1% reprogram their beliefs to align with freedom, not consumption. Finally, delay rewards. Train yourself to wait. If you want something, give it 30 days. Most of the time, the desire fades, or you find a smarter way to get it. This builds your ability to control impulses, and that control compounds into power over time. The truth is, most people don't get wealthy because they don't give money time to grow. They interrupt the compounding process by spending every gain. Buffett's wealth wasn't built on big wins. It was built on not pulling money out, not giving in to lifestyle pressure, and letting time do its job. And here's the real secret. Discipline creates confidence. Every time you delay gratification, you tell yourself, I'm in control. That belief changes how you think, how you act, and what you expect. You stop chasing approval and start building freedom. And when freedom, not stuff, is your metric for success, you're already ahead of 99% of people. So the next time you're tempted by a quick upgrade or impulse purchase, ask yourself, what would Buffett do? Then do what the 1% do. Invest the difference and walk away with peace. Lesson 4. Learn to love. Boring? Warren Buffett's approach to wealth building isn't flashy. He doesn't chase crypto, gamble on IPOs, or flip the latest hot trend. He's not addicted to excitement. Instead, he says this: the stock market is a device for transferring money from the impatient to the patient. In other words, Buffett wins because he's comfortable with boring, and that's what the 1% understand better than almost anyone else. We live in a world that rewards stimulation. Everyone wants the next big thing, the fastest return, the most explosive opportunity. But the ultra-wealthy think differently. They understand that real success is rarely loud, it's methodical, predictable, repetitive, and for most people, that's too boring to stick with. Buffett has said, we don't have to be smarter than the rest, we have to be more disciplined than the rest. That discipline is what allows him to keep investing in businesses that grow slowly but steadily over time, companies like Coca-Cola, American Express, and Apple. He didn't buy them because they were exciting. He bought them because they had consistent cash flow, long-term durability, and trustworthy leadership. He's not looking for surprises, he's looking for reliability. That's not boring, that's brilliance. Most people think that high activity equals high results. But Buffett disagrees. He says, the trick is, when there's nothing to do, do nothing. The 1% don't feel pressure to constantly be in motion. They don't panic when things slow down. They don't confuse boredom with failure. They know that consistency compounds quietly. This same mindset applies far beyond investing. Think about the habits that lead to success in any field. Waking up early, saving money, tracking progress, eating well, reading daily. None of these are exciting, but done consistently, they separate the top 1% from the distracted majority. The problem is, most people chase excitement instead of progress. They start something new, feel a quick hit of motivation, and then abandon it when it stops being fun. But the people who win, really win, stick with the fundamentals long enough for mastery to take over. Buffett reads for hours a day. He's been doing it for decades. He reviews the same principles. He asks the same questions. He doesn't need a new system. He just needs to follow the right one consistently. That's how wealth is built. The 1% understand that boring isn't bad, it's effective. When a process works, you don't reinvent it, you repeat it. And every time you repeat it, your advantage grows while others get distracted or discouraged. So how do you learn to love boring? First, reframe what boring means. Instead of associating it with laziness or stagnation, associate it with stability and strength. A consistent process may feel slow in the moment, but over time it creates exponential results. Remind yourself boring is where the magic happens, because boring is what most people quit. Second, track your progress. When you see proof that your routines are working, even in small ways, you build trust in the process. Buffett doesn't check his net worth every day, but he knows that if he sticks to his framework, the numbers will reflect it over time. You can do the same with your health, finances, or skills. Third, build systems instead of chasing motivation. The wealthy don't wait until they feel inspired to take action. They build habits that run automatically. If you automate your investing, plan your mornings, or schedule time for learning, you remove willpower from the equation. That makes boring not just bearable, but powerful. Fourth, limit your exposure to noise. If you're constantly reading headlines or comparing your life to others, you'll always feel like you're missing out. The 1% tune out hype. They don't jump every time a new opportunity appears. They know that mastering one boring process beats trying 5 new ones every year. And finally, build emotional endurance. Get comfortable with repetition. Understand that success is not the result of genius. It's the reward for sticking to what works while others chase novelty. When you're tempted to quit or pivot, remind yourself that Buffett became one of the richest people on earth, not by being exciting, but by being unshakable. There's a story Buffett often tells about the difference between investing and baseball. In baseball, if you wait too long for the perfect pitch, you strike out. But in investing and in life, you can wait. There's no penalty for patience. He says, the stock market is there to serve you, not to instruct you. That mindset, the ability to pause, observe, and act only when it's time, is a superpower most people never develop. Because most people are addicted to motion, the 1% are addicted to what works, even when it's boring, especially when it's boring. So if you want to build Buffett-level results, start by embracing Buffett-level discipline. Ignore the noise, trust the process, and master the art of showing up, calmly, quietly, and consistently. Lesson 5. Invest in yourself. Relentlessly. If you want to increase your value by 50%, learn to communicate better. Warren Buffett has said this multiple times, and not as a vague suggestion. He calls it the most important investment you can make. Buffett's highest return investment wasn't a stock. It was a $100 public speaking course from Dale Carnegie that helped him overcome a crippling fear of talking to people. That single decision changed everything: how he led, how he sold, how he inspired. And it taught him a timeless truth. You are your greatest asset. The 1% never stop investing in themselves. They don't wait for permission to grow. They read, train, test, and improve constantly, not because they're insecure, but because they understand that who you become determines what you earn. Buffett reads 5 to 6 hours a day. Not because he's bored, but because he knows that mental compounding is just as powerful as financial compounding. Every idea, every insight, every mental model becomes a building block for smarter decisions. He doesn't skim headlines, He digs deep, and he protects his mind like others protect their bank accounts. So what does it actually mean to invest in yourself? It means you take ownership of your development. You don't wait for a company, a coach, or a crisis to push you. You choose to grow every day. The most successful people treat their minds like a business. They ask, what's my ROI on how I spend my time, energy, and attention? Buffett's advice is simple. The more you learn, the more you earn. But this doesn't just mean technical skills or reading more books. It means mastering emotional intelligence, communication, time management, and self-awareness. These are the leverage points that make everything else easier. For example, learning how to speak clearly can 10 times your career, even if your technical skills stay the same. Learning how to listen better can transform your relationships. Learning how to manage your calendar or reduce distractions can double your productivity. These are skills that don't just pay once, they pay forever. Another key lesson from Buffett: protect your time like a billionaire. He famously said, "The difference between successful people and very successful people is that very successful people say no to almost everything. The 1% understand that time, not money, is the real currency. They don't fill their calendars, they guard their focus. Buffett blocks out hours each day for thinking, just thinking. He avoids meetings, he doesn't chase busy work. That stillness is where insight lives. Most people never access it because their lives are too loud. Investing in yourself also means building strong habits. Buffett didn't build his empire in a year. He built it by stacking small, consistent habits that compounded over decades. Reading, thinking, evaluating, deciding. Nothing glamorous, everything essential. So how do you apply this? Start by building a learning habit. Read 20 pages a day, or listen to a great podcast, not just for entertainment, but for depth. Focus on topics that build your understanding of money, business, human nature, and yourself. Track what you learn, review it, apply it. Second, audit your time. Look at your calendar. Are you spending hours reacting to emails and social media? Or are you carving out time for thinking, creating, and growing? The 1% don't spend time, they invest it. Start treating your attention like it's expensive, because it is. Third, prioritize communication skills. Join a speaking club. Write more. Practice explaining complex ideas simply. Buffett says he looks for people who can say no in a way that doesn't offend others. That's high-level communication, and it's rare. Fourth, surround yourself with people who raise your standards. Buffett's longtime partner, Charlie Munger, is known for his sharp thinking and discipline. They push each other. The 1% curate their inner circle like their portfolio. Ask yourself, are the people around you helping you grow or keeping you distracted? Fifth, invest in your health and energy. Buffett might not be a role model for diet, but he's always emphasized that your body and brain are your ultimate vehicles. If you burn them out in your 30s or 40s, your earning potential and joy plummet. The ultra-wealthy treat energy as a business asset. And finally, track your evolution. What books did you read this year? What skills did you build? What habits improved? This creates momentum and helps you measure your growth, something most people never do. Buffett's net worth is impressive, but his mindset is more valuable. He's not obsessed with being busy, he's obsessed with being better. That's what the 1% do. They know that every hour spent improving themselves pays interest for life. So if you want to do what the 1% do, start with this. Don't just grow your income, grow your value. Conclusion: you don't need to be Buffett, but you can think like him. You don't need Warren Buffett's billions, connections, or decades of investing experience to adopt the mindset that made him wealthy. What you do need is clarity, discipline, and a willingness to think differently than 99% of people. Because what Buffett really teaches through every decision, quote, and habit is that wealth isn't just about money, it's about how you think, how you act, and what you're willing to repeat for years without applause. Buffett doesn't win because he's a genius. He wins because he stays calm when others panic. He sticks to a strategy that works. He doesn't need excitement or approval. He trusts the math, the long term, and himself. And that's what separates the 1% from the rest. They don't follow the crowd. They don't chase shortcuts. They build something slowly, intentionally, and with full belief in the result. You can start right now. You can think long term, even when everyone around you is impatient. Master one thing and stop scattering your focus. Delay gratification and build wealth quietly. Embrace simplicity even when it's not exciting. Invest in yourself like your future depends on it, because it does. You don't need to make perfect decisions. You just need to make good decisions, consistently, for a long time. Buffett himself says it best: the chains of habit are too light to be felt until they are too heavy to be broken. If you start today, those chains can work for you, not against you. So, do what the 1% do. Build your snowball, ignore the noise, play your own game, and let time make you unstoppable.